higher heading into, it ended up about 1%, but seeing a little bit of a sell-off based on some of these numbers that are just coming out, Nicole.
Yeah, I'm watching that. So the stock's looking down about 5% now as these numbers are coming in. You do see a beat on the top and bottom line on the quarterly numbers. You have, let's see, the $1.86 beats the well, I have fourth quarter adjusted. These may need to be adjusted, but I am seeing a beat on the top and bottom line as it's interpreted here. So $1.86 beats the estimate of 148. I had the estimate at 152 for some reason, but the big picture, and the 187.80 also. So you have a double beat on the top and bottom line, but what's missing here on the big picture? And, there was so much that was going to be in Amazon. It was the cloud number one. That's got to, we already saw, we were here for the Alphabet Google. That was a miss. Microsoft was problematic also in the cloud number. This is where we've got to see something better or different from Amazon.
And it seems like we're getting just in line with expectations for that cloud number, Kevin. I'm seeing 28.8 for AWS. And that was in line with what analysts were looking for, but it seems like maybe that's a disappointment.
Yeah, I think the market may have wanted a little bit more. Once again, we're still kind of seeing the initial reaction. If you take 2 decimal points, technically it missed, but it's okay. The commentary on the call is going to be very key. I think the North American sales, actually, if you're just looking at the earnings in general, were actually pretty much in line. Everything looks like it was, for the most part, in line with the street's expectations. Nothing that was a really big knockout here. We'll give forward guidance. We'll see what the CapEx spend is going to be. That's been a really big focus area for the market as of late. The North American segment sales came in around 10% increase on a year-over-year basis. International sales segment came in at around 8% on a year-over-year basis. We already talked about AWS. Overall, I don't see anything that's like really too negative here, but maybe just a high bar going in. Yeah, what do you got?
I think that the Q1 revenue seems like it's falling short of expectations. Nicole, I'll let you chime in here.
Yeah, so I'm just looking at that. So we see it as 151 billion to 155.5 billion, and that is below what was the original estimates of approximately 158.5. roughly. So it looks like softer first quarter guidance, coupled with that number that you guys were talking about that came in at 19% with the 28.8. I don't have it handy, but I remember the AWS revenue, because I remember thinking, I was talking to Kevin Hanks earlier today, and there were more about the whisper numbers, really about the 20% level, because we'd been at the 19%. Also, CapEx, what are they going to be spending? Data centers, GPUs, things like that. That will also be part of it. But this is part of the issue. The guidance is soft, and so as a result, it looks like we are seeing this stock to the downside here. About 5%.
Yeah, but Kevin, to your point, it seems like the market is still trying to, kind of digest these numbers as they come, because we already are seeing that initial sell-off kind of peter out. So I think the earnings call will clearly be important. As Nicole said, CapEx is going to be important, but AWS, growth in line with expectations after we saw Microsoft get hit because of it. We saw Alphabet get hit because of it. One might assume that Amazon, trading near all-time highs, might get hit because of it too.
Yeah, that might be the case. Once again, we'll get the reasoning for the weaker guide moving forward. It could be tariff risk, obviously, when it comes to the products that they're bringing in to the U.S. and where they're being sold from. It looks like they took around a $900 million hit when it came to currency, foreign exchange. So that's a meaningful number too. So we got to be mindful of that. So once again, yeah, you don't want to miss, but at the end of the day, AWS still came in exactly where the street wanted it to. I think that's what the market is really pricing the stock off of for now. And if they are guiding a little bit lower because they're a little bit more cautious about the macroeconomic outlook, I don't think that's a bad thing. They also may have had a little bit of a pull forward when it came to sales for the quarter that's being reported right now as well. So there's a lot that could be factored in here. A little bit of a pullback. It ran up really strong before the earnings announcement here. So a pullback here is probably not too surprising, but the conference call can change this whole thing.
Yeah, that certainly can be the case. And like we said, the pullback pretty modest at this point. Nicole, anything else that's coming out for Amazon that's standing out to you? I haven't seen the CapEx number yet, but I know that's could be upwards of 80 billion.
Yeah, and look, net sales rise 10% year over year. North America up 10%, international up 8%. I also would like to hear the conference call. And also what happened with the holiday season? Did they do very well or not? That's something that people would like to hear more about as well. So that's what I'm hearing. And so revenue growth 10.5%.
Yeah, and Amazon says it was the best on record for the holiday season.
Oh, there
so
you go. Okay.
I think that I probably contributed to that. So Amazon, you're welcome.
I'm sorry, I do have something here. I'm sorry. Can I cut in real quick?
Go ahead, Kevin. Sure.
Okay, so the guidance, the reason why the market might be shrugging this off a little bit, the company is expecting an unusually large unfavorable impact of approximately $2.1 billion or 1.5% for foreign exchange risk that is out there. And that's actually a very aggressive impact or guidance because of foreign exchange. That's probably the largest one that we've seen out of all the Mag 7 names that have reported so far. Actually, probably a lot of the companies that we've seen. So that actually kind of makes sense as to why we saw that massive miss. Unfortunately, they should have some hedges in place. That's very aggressive for the exposure, but that kind of makes sense as to why. So if you add that $2 billion on to what they actually guided for, it would have came in line with the street's expectations.
Yeah, so Kevin, are you surprised that the street is shrugging it off? Because all of these big cap, tech names are contending with a strong dollar, and so dealing with FX headwinds. So are you surprised that the initial reaction is, oh well?
Well, I mean, every business is going to be a little bit different in how they repatriate dollars back to the United States as well, right? So that's one. That's why I would say, you kind of shrug it off, because currency exchange risk just in general is always going to be inherent for a lot of these companies. So if you look at it from a constant currency standpoint in their guidance, most likely that would have came in line probably a little bit higher than the street's expectations overall. And that's just something that is the cost of doing business. Maybe they'll talk about maybe some of the hedge strategies that they could put on moving forward in order to try to mitigate that risk. Sometimes when you have currency risk and it's not an operational issue or a fundamental issue for your business alone, I feel like the market's going to shrug that off after kind of digesting that a little bit more.
Okay. All right. I was just reading through some of the commentary. Just really, the holiday season was the most successful yet, talking about AWS too. So let's see what they have to say on the earnings call. I think we should move to Pinterest, because this looks like it's right out of the gates. This looks like a huge winner for Pinterest. Obviously, not nearly as close to the highs as Amazon, so maybe the bar a little bit lower. But what are you seeing for Pinterest that has investors pretty happy right now, Nicole?
So it's interesting. First of all, you're right. The stock is really surging. It's up over 25% right now. Don't forget, Snap really did well, had an initial jump on its quarterly numbers. This name is far off the highs, the $45 mark last summer. So it does have some room to grow here. Global monthly active users rises 11% and comes in at 553 million. So that is more than the 547.5 million that was estimated. That's part of it. They delivered their first $1 billion revenue quarter. This is all good news here. And when we look at this, you have to also think about what's been going on. You have TikTok, you have, what people have been searching for overall. And so this has been a name that we've been watching in the big picture. I don't see the top and bottom lines just yet, but certainly obviously great news here.
Yeah, in terms of Q4, 56 cents per share, versus I see a 65 cents per share estimate. So maybe potentially a miss on the bottom line, but it looks like the Q1 revenue outlook coming in quite a bit better than expected. 837 million at the low end, 852 million at the high end. The expectation was for 832.8 million, Kevin. So I think that this is one where they're focused on the uptick in users and the revenue guidance here.
Revenue guidance, uptick in users, and as well as the profitability. So if you actually look at the EBITDA outlook for Q1, they're looking at 155 million to 170 million. Street was looking for 140 million. That's actually a better beat than what you would look at for the top line revenue guide moving forward. And then also the monthly active user estimates right now is sitting at around 553 million for Q4. Street was looking for 545.8 million. So this is actually a really good report. I mean, a really good turnaround story. Makes sense why you're seeing a pretty decent pop after hours here. Let's hear on the conference call what's really turning this thing around. Was it a low bar, or do they have a new offering that's actually improving the experience? Is AI also helping them? Is it making it a little bit more sticky when it comes to ad revenue and product placement? There's a lot of questions to be answered here, but a really good report overall here.
Yeah, we'll see how much those AI tools are boosting the advertising spend. In terms of earnings winners, too, Nicole, I was just taking a look. I saw Afrm have a nice pop. It seems like that's kind of petering off. Do you have those numbers for Afrm quite yet?
Sure, I'll take a look right now. I mean, when I was thinking about Afrm, I mean, we think about the buy now, pay later. Let's take a look and pull this up at this moment. Pardon me. There you go. So we look at Afrm, obviously a name that 1 year is up 48%. I'm not seeing the numbers just yet. I know that they're starting to hit the wires here, 2025, these results for the big picture that they're giving us. But when you think about Afrm, you're thinking about how we saw PayPal and some of these others beating. You're looking for monthly active users and growth and the gross merchandise volume, transaction values. These are the things that we're going to see here on the big picture. Let me check it out, how much it's moving.
Well, that gross
percentage.
merchandise volume is very much the key metric, it seems like. I was talking about that with Jeff Pierce this morning. That's really the key number to home in on. And I'm seeing the outlook coming in for the full year for that before I'm actually seeing the trailing numbers.
And the stock's
so
up
GMV
5%.
Is expected to come in between 34.74 billion and 35.34 billion. And they did say GMV of more than 34 billion when they last reported. So that's actually higher than the initial guidance. So that likely would be seen as positive news. Kevin, want to give you a chance to weigh in on Afrm. I know the numbers are just starting to come in here.
Yeah, so when you're looking at it for Q2, merchandise volume, gross merchandise volume came in at $10.1 billion. You're looking at revenue coming in at $866 million. Obviously, you kind of already talked about the guidance, a little bit ahead of the street's expectations here. I'm actually looking at the net charge-off rate. That's the one that's very interesting when it comes to Afrm, because they're adding so many new loans onto their book. Their net charge-off rate is actually lower than what we see for American Express, which is actually very remarkable for me. And I feel like there's a story to be told there in the future, but maybe not today. But overall, when you're looking at the initial numbers, it looks decent. Let's hear about the conference call. Probably saw a pretty significant amount of adoption throughout the holiday season as well, a method to be able to pay for gifts and services and things of that nature. So maybe some tailwinds, but once again, I'm looking at the net charge-off rate. That's really what interests me when it comes to these lenders as well as these financial institutions when they report. I think that's more of a story than top or bottom line top and bottom line growth.
Okay. And the growth, by the way, GMV looking so much better. That's up 35%, over 10 billion, had been over 7 billion prior. And these numbers, consumers, merchants are all on the rise quarter over quarter, and the stock's up about 5%.
Yeah, 10.1 billion, as Nicole said, was the gross merchandise volume. The expectation was 9.35 to 9.75 billion. So easy beat for that metric, hence why we could also be seeing shares higher. All right, we have to take a quick break, but coming up, George Sillis